Everyone's looking for ways to potentially grow their wealth, right?
Yeah.
But without the constant stress of watching markets all day.
Absolutely. That's the dream for a lot of people.
So today we're doing a deep dive into Faida Ventures Ltd, based purely on the description they provide about themselves.
Okay.
Our mission really is just to understand how they say they can help you, the investor, potentially grow your capital. We want to give you some quick, useful insights.
Makes sense. What are the core pillars they mention?
Well, they seem to focus on keeping you in control, a profit-sharing model, using expert trading systems, and importantly, risk management.
Right. That control piece sounds interesting. They say you use your own broker.
Yeah, exactly. You keep your account where it is with your preferred broker and just give Fata Ventures trading access.
Okay. So you retain ownership, you retain the relationship with the broker. That probably feels safer for many.
It seems like a key point for them, yeah.
Yeah.
Reduces friction, maybe.
Yeah.
But what kind of access are we talking about? Is it just for trading?
That's the critical detail, isn't it? You'd absolutely need to know the exact permissions. Can they only place trades or more? Clarity there is paramount.
Definitely something to check. Okay, let's talk fees. They call it transparent profit sharing. The idea is you only pay them after your account value goes up.
Right, based on a high watermark. So if the account dips, you're not paying fees on losses or just to get back to where you were.
Exactly. And they stress no hidden fees. On the surface, that sounds fair. Their success is tied to yours.
It does align incentives, which is good.
Yeah.
But, what's the percentage? How is that profit actually calculated? Is it just hitting you peak, or are there other factors? Details matter.
Good questions. Then there's the expert trading solutions bit. They talk about using AI-driven EAs, expert advisors.
Ah, the AI angle. And proven trading success, they claim.
That's the phrase, yeah. AI sounds sophisticated, but what does it mean practically for an investor here?
Well, AI can mean efficiency, speed, data analysis. But proven success needs unpacking. Proven how? Based on what data? What time frame?
Right. Past performance isn't a guarantee, as they say.
Exactly. And how adaptable are these AI systems? Markets change. An EA that worked last year might not work next year.
True. Okay, what about risk? Big concern, always. They mention 247 account monitoring, and crucially, that you can revoke their trading access anytime. They say it's for ultimate peace of mind.
That ability to pull the plug is a vital safety net for the investor, absolutely key.
Yeah.
The 247 monitoring suggests vigilance, but again, what does that mean? Are there automated stops? Human oversight? How quick is the reaction if something goes wrong?
More questions to ask.
Yeah.
Now, they are quite upfront about something significant in their disclaimer.
Oh.
They state clearly, we are not a regulated entity.
Oh, okay. That's huge.
And they add, as a client, you are fully responsible for monitoring your account.
Wow. Okay. So no regulatory oversight means fewer protections compared to regulated firms. The onus is entirely on the investor to watch their own account closely.
It really puts the responsibility squarely on your shoulders, doesn't it?
It absolutely does. And it raises questions about dispute resolution, too, if things were to go sideways.
Something to seriously consider. They do have a social media presence, too. YouTube, Facebook. People could look there, I suppose.
Sure, you can look. Social media might give you a feel for their communication style, but it's definitely not a substitute for proper due diligence, especially given the non-regulated status.
Good point. So their whole message seems to boil down to their tagline. Your wealth, our expertise together, we prosper.
It's a partnership pitch, but the success of that partnership depends heavily on their actual expertise and your vigilance, especially with that disclaimer.
So let's wrap this up. Key takeaways seem to be, you keep your broker, fees are supposedly profit-based, they use automated systems, and you have the power to revoke access.
But balanced against the significant fact they aren't regulated, meaning you carry the full monitoring burden and have fewer formal protections.
Right. So thinking about this model, this idea of letting someone else trade for you to potentially grow wealth, what are the absolute make or break questions you, the listener, would need answered before handing over trading access to anyone, regulated or not? Something to really mull over.